Welcome to the AI Hardware Insights, your go-to source for the latest developments in the world of AI hardware. I'm your host, and in today's episode, we have an exciting lineup of stories that every investor should be keeping an eye on. ARM's blockbuster IPO. Last week, ARM made waves with its IPO, sporting the stock ticker ARM. The company achieved a valuation exceeding $54 billion, making it one of the largest tech IPOs in recent memory. ARM shares debuted at approximately $51 per share, concluding its first trading day at nearly $65 per share, reaching a market cap of roughly $69 billion. This rapid rise in valuation is remarkable, especially considering NVIDIA's nearly $40 billion acquisition bid for ARM from SoftBank not even 2 years ago. The question arises, is ARM worth its current price? ARM, a British chip design firm, specializes in processors and licenses its designs to various chip companies like NVIDIA, AMD, and Qualcomm, as well as consumer hardware giants such as Amazon, Google, and Apple. ARM processors are renowned for their energy efficiency compared to x86 processors like those from Intel and AMD. This efficiency results in smaller, lighter devices that don't require separate cooling. Approximately 95% of all smartphones employ ARM-based processors. Moreover, Apple utilizes ARM architecture in most of its products, spanning from the iPhone and iPad to Macs, AirPods, Apple Watch, Apple TV, and the forthcoming Apple Vision Pro headset. Notably, major cloud providers like Amazon Web Services, AWS, and Google are incorporating ARM-based processors into their data centers. Oz anticipates that over 20% of its data center servers will feature ARM-based processors by 2025. Google Cloud, following AWS's lead, has developed 2 different ARM-based CPUs for its servers. This move is pivotal as the data center market remains expansive and is still experiencing exponential growth due to the proliferation of cloud services and emerging workloads such as AI training and inference. While ARM stock holds substantial long-term growth potential, it's important to note that influential tech giants like NVIDIA, Apple, and Google are not just users of ARM's chip designs, they are also strategic investors. They acquired approximately $735 million worth of ARM shares during its market debut, bolstering its credibility as a long-term tech investment. However, caution is advised before jumping into ARM stock, especially given its current valuation. I've recently released an in-depth video covering ARM's history, business model, financials, and its complex relationship with an entity known as ARM China, which ARM does not directly control. I highly recommend watching this video before considering an investment in ARM stock. You can find the link in the top right-hand corner of your screen and in the description below. AMD's latest chip designs. AMD has recently unveiled 2 new chip designs that could potentially challenge Intel, although not necessarily in the areas that most investors traditionally follow. AMD's Zen 4 architecture, released approximately a year ago, marked a significant advancement over Zen 3 in terms of power efficiency. It boasts around 14% more instructions per clock cycle, 16 more cycles at the same power level, and the ability to use about 60% less power for equivalent performance. In data center chips, these improvements typically translate to roughly 2.5 times the performance at the same power consumption. AMD also showcased its upcoming Sienna platform at Hot Chips 2023. Sienna offers decent performance at remarkably low power consumption, with configurations featuring up to 64 cores and power draw ranging from 70 to 225 watts. This makes Sienna ideal for standalone microservers and edge devices. The edge device market is poised for substantial growth over the next decade, especially with the increasing adoption of self-driving cars, smartphones with integrated inference chips, and game consoles equipped with dedicated AI chips. Remarkably, AMD's embedded segment, which includes Sienna, is its fastest-growing and highest-margin business unit. Last quarter, this segment generated $1.5 billion in revenue, a 16% year-over-year increase, driven by strong demand in various markets, including industrial, healthcare, and automotive. With operating margins exceeding 50%, AMD might consider doubling down on embedded systems, differentiating itself from NVIDIA and Intel, and potentially becoming a more compelling chip investment. For comprehensive stock market research and investing, I recommend using moomoo, an exceptional app that provides extensive market data and financial information on individual companies. You can access essential metrics, forecasts, and historical data, all in one convenient location. If you want to make the most of this app, don't miss the opportunity to receive up to 16 free stocks, including shares of Tesla or Google. Thank you for tuning in, and remember that the best investment you can make is in yourself. If you found this information valuable, please consider liking and subscribing to the channel for more insightful research.